Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, July 11th, 2025. Ron Quaranta here with my amazing co-hosts, Josh Klayman, David Brill on vacation or on assignment, and the one, the only founder of Change Agents, our old friend, Michelle Gitlitz. It's good to see you all. Thank you so much for joining. Before we begin, our usual disclaimers. Thank you all for joining us, watching us on LinkedIn Live, and streaming on X as well. If you've got questions for any of us, please drop us a note in the chat. We're happy to respond to them. And obviously our usual disclaimers, please keep in mind that nothing discussed is any sort of accounting, investment, legal, or tax advice. And when David and I are talking, or Josh or Michelle are talking about tokens, we're not recommending them, I promise. David, as you're sipping Ouzo, we've got lots of markets updates to talk about. It's been a busy couple of weeks since the last we met. But first, the one, the only Michelle Gitlitz. Michelle, I wanted to start with you. Every couple of weeks, part of our legal working group, we talk about legislative and regulatory and all of this stuff that's going on in the United States. And I always start with, hey, Michelle, what's going on in the States? and I think it's an important part of the conversation when we look at the federal legislation work that's happening, when we look at the regulatory stuff, absolutely critical. But there's so much that's happening stateside that's making businesses say, where do I start? What do I need to do to enter the U.S. market, given what's going on? Michelle, what are you seeing in the marketplace, and what are you focused on at Change Agents?
Thanks, Ron. Yeah, I think it's a really exciting time because it finally feels like the doors of the U.S. are opening and that we're open for business in crypto. And I think that it's interesting because we're seeing a lot of institutional players coming into the market. And when you're dealing on the institutional side, it's going to be very hard to have that institution have you as a counterparty if you don't have some regulated entity set up. And so what I'm seeing a lot of is traditional sort of DeFi entities spinning up a regulated subsidiary that's looking to penetrate the US market. And on the state side, there's a lot of complaints, I think, about the fact that for at least money transmission, the receipt of value from one person and the transmission of value to another person, whether that value is crypto or fiat, is regulated both by the federal government, but also by the individual states. And so you have states like Wyoming, who have traditionally been very crypto friendly, doesn't even really regulate crypto to crypto transactions. We see Kraken announcing that they're moving their corporate headquarters to Wyoming. We see Wyoming continue to launch their Wyoming stable token. I'll come back to that in a second. We're seeing laws being passed in Illinois of sort of a more bit license framework. But unlike the bit license in New York when it was passed in 2014 or 2015, industry really had a chance in Illinois to stand up and say, well, wait a second, as drafted, we don't agree with all the provisions of this bill. And there was a lot of movement from the way the legislation in Illinois started out to what was eventually passed by the legislature and is sitting on Governor Pritzker's desk to be signed. And that's a collaboration of the ecosystem getting together to say, well, wait, crypto has a voice, and these regulations sort of reflect that voice.
Yeah, Michelle, thanks so much. And I think you and I and all of us have colleagues. Joe Sicolo, I'm thinking certainly focused on California. Shout out to Joe. Renato Mariotti from Paul Hastings in Chicago. David Pope in Wyoming. Michelle, I want to ask for myself certainly, but what for the audience as well. What might seem a silly question. A lot of the conversation is really focused on, particularly for DeFi, starting the foundation and then starting the operating company. For those who may not understand that dichotomy, can you explain that a little bit? Can you dive into that a little bit more?
Yeah, I mean, I think different companies have different approaches. You have foundations, and that foundation could have many different purposes and many different reasons why it exists. Maybe it's working with a DAO or multiple DAOs. You also have lab entities, an entity that's just set up and has the technology of and has intercompany agreements with another related entity to license technology. And then oftentimes you've just got an entity within your licenses, and that is the regulated entity. And that entity is not part of the foundation or labs. It's a separate entity that's only doing the domestic money transmission.
Michelle, thanks so much. And David, come into this conversation as well. You and I often discuss this. The last thing I want to ask about this, Michelle, and I want to give the floor to David a little bit. When we look at these organizations saying, I want to start up in the US, there is this TradFi perspective a lot of my colleagues have, which is, well, you've got to start in New York, let's call it. Why is that so hard to do? And David, I know you and I have had this conversation as well. I love your perspectives on it.
Sure. Well, for one thing, it takes much longer to get a BID license than it does for almost any other state license. So it almost, if you look at it and you look at the time continuum it takes to get all these licenses, which is probably like 12 to 18 months, when you include New York, it makes sense to start with some of the other states, build up your licenses, fill out the applications, and then build up a track record a little bit as you wait for New York to review your file. So on the idea would be, ideally you could get the licenses in a somewhat same 3-month window, but you have to remember that states have to allocate personnel to look at these applications. The applications are very detailed. They require a lot of policies, financials. And so in some instances, you need history of financials. You need to do, due diligence on the owners, fingerprinting in some states. So there's all of these things you need to do, and it takes quite a while. And some of the other states can move more quickly. So that's why you might get a license there first.
Yep. And Michelle, to that point, again, just sticking to picking the right state, I guess the question becomes, you mentioned Wyoming a bit earlier, and we should get David Pope from the 1,000-acre compound in Wyoming to dial in at some point. But why are things like the stable token work that's happening in Wyoming important to the state's dialogue? And are other states looking at that and thinking we need to emulate that going forward to be part of all of this?
I think Wyoming's taken an interesting approach because a lot of the incentive to get into the stablecoin world is the interest that is earned on the reserves. That's a very valuable stream of income. What Wyoming's done, and generally that income on reserves is not shared with the token holders. There can be some arrangements where it is shared, but those are generally institutional arrangement, not retail investor arrangement. What I think is really interesting about Wyoming is the interest on the reserves is going to benefit the residents of the state. And so when you think about other areas, like I know in New York, one of the big pushes for the marijuana industry in getting legislation for recreational marijuana had to do with the fact that the proceeds of the taxes were going to help benefit the state, like education resources. And so here you see another mechanism by which income can be earned. And we're talking about population-wise, a very small state that could have a lot of additional income for its own infrastructure, its own healthcare, its own government services from this token. I'm not hearing much about other states emulating a stable token, but we're seeing in Wyoming, we're seeing in Texas, oil-backed stable coins. We're seeing a lot of trends in Texas being very, very friendly to stablecoins. We're seeing states have reserves in crypto. And again, this goes to the wealth of the state and how the state can benefit from this new asset class.
Michelle, thanks so much. I think we've got Josh back, but her video is not cooperating. Josh, I'm not sure if you can hear us. Michelle,
yes,
I do
want to hear you. Can you hear
Excellent.
me?
Yes,
I can see you guys fine too. My computer installed some updates, so who knows what they were updating.
Josh, thanks for coming back. I want to raise a couple of things. Michelle, you raised something, and Josh would love you and David to weigh in on this as well. The stable coin, the crypto reserves is something I hear a lot about as well. And David, you and I had this conversation. There will be a strategic Bitcoin reserve at some point, but we are seeing states move down the road of having their own crypto reserve. David, I want to ask the question that's hard for a lot of folks not plugged into the ecosystem to really grasp, which is, what's the point of individual states having crypto reserves of their own? And how does that change if we do have a United States strategic Bitcoin fund?
Well, look, each state has a
David, did we
pension
lose you
fund.
too?
Can you hear me?
Yeah, we got you.
State has its own, okay. Each state has its own, pension funds and manages money for the state. And so when you think about it, if you want to have diversified holding, maybe a state's holding some gold, maybe they're holding some silver. Why not hold some crypto as an alternative asset? Some states hold private equity ownership or venture capital shares. So why not have as one of the, ways that they're holding assets to have crypto assets? I mean, look, they are obviously, a little bit riskier than some of the other assets that the state could hold. But if the state's committed to crypto as part of its ecosystem and developing it, certainly a possibility for them to hold some.
David, thanks so much. Josh, good to have you back, my friend. We've been talking about some of the state work that's happening, and I know you and I have this conversation as well. Would love you to weigh in on some of this where it makes sense. And I think it's also becomes a good segue to some of the federal conversations we've been having as well. So I want to give you a little bit of floor time before we move forward.
So without having the benefit of hearing everything that was going on, I did come in at the tail end where you guys were just discussing the state Bitcoin reserves. So, I think we've definitely been seeing that as a possibility. And Ron, to your question, which I agree with what David said, I think it's a completely different revenue stream from the federal. Because I've actually asked people, I've been like, okay, so how does this work if you also have a federal? Is there and it's sort of like, no, this is just a separate thing. I mean, just the revenue from the interest on the reserves. And so if you think about relationships that might be forged in various states, right, between the states and perhaps folks in our industry or otherwise, or in TradFi, whoever may be holding the reserves, right, on behalf of the states, there are some strategic opportunities out there, and I think pricing, if any, is an interesting question, right? Yep. So I think, I know like folks are considering, where and how one might help states in this regard.
Josh, thanks so much. Josh, Michelle, David, the thing that also comes up, and it's a softball leading me to some of the federal conversations that we have. Stablecoin, the Genius Act recently passed the Senate. There's a lot of the usual political sausage making that's happening in DC. David, Michelle, Josh, I'd love your perspectives. I certainly have a lot of colleagues in TradFi making predictions around how these things move forward. David, I wanted to ask you, in my mind, and let's start with the stable Genius, and then we've got Clarity, which is really focused on market structure. Next week is Crypto Week something in DC, with more hearings and anti-crypto hearings. David, my argument is that the market structure bill, Clarity Act, is much more important in the grand scheme of things in the crypto space. David, Michelle, Josh, am I wrong in that perspective?
So I think you have to look at it incrementally, Ron. Like market structure is probably the biggest piece of the puzzle. But as far as getting legislation passed, I personally would just like to see stable pass first and then focus on market structure, because market structure is complicated. There are a lot of issues that still need to get hashed out. And I think they're making really good progress. But one of the things I've learned about Washington over the years is take the wins when you can get the wins. And I feel like you can get the win on stable and still work on market structure. So agree with your premise, Ron, but I would take the win in stable and then move on to market structure.
Yeah. Josh, go ahead.
I agree. And I think it's interesting what we saw yesterday, right, with the new version of the market structure bill coming out of the House, which includes within it some tweaks or changes to the Genius Act, right? So that then you can have the ability of the House to volley back, right, the identical version of the Genius bill, have that signed into law by Trump after all the stuff, and then still not quite concede on all the points that may be important to holdouts. So as you may have seen, there's a section at the bottom in what came out on yesterday, a new version. It was unveiled by the Rules Committee, and it includes some different accounting requirements and a provision that would allow for commodity-backed stablecoins, et cetera. So I would recommend for those at home who are following at home, to keep apprised of all of this, as we all certainly are trying to.
For everyone in the audience who isn't aware, Josh is one of the few people I know that actually has copies of draft legislation sitting on her desk. So she's literally looking at some of the stuff that they're crafting. Michelle, weigh in on this. Now, I guess I want to ask this for the group as well. One of the things that didn't make it to Genius Act, and forgive me if I'm misremembering, but was the provision around de minimis exemptions. And I think it didn't make it, David, for scoring reasons, not necessarily tied to the legislation. And then Senator Lummis immediately put forward a separate draft of, here's crypto de minimis because we shouldn't be getting a 1099 DA when we buy coffee. Michelle, what, in your mind, I'm not sure how much of a part of this is your daily conversation, but how critical is that?
I think de minimis exemptions are pretty critical, because I don't think every time, if we want, stable coins and crypto payments to proliferate, which is different from other types of crypto transactions, making people account for the conversion of their Bitcoin to fiat to buy a $5 cup of coffee or a latte doesn't make a lot of sense. And in fact, I think is pretty disruptive from an administrative standpoint. When I worked at a digital payment processor, that process of sending all of our customers transaction reports so that they could file their taxes is not, an unonerous process. But I think, to go back to one of the things you're saying, what I have been hearing a lot lately are overseas projects who have shunned the U.S. thus far and who are now saying, well, wait, maybe now's the time, but it's confusing because they know or they've heard about the state money transmission licensing, but they see the Genius Act or the Clarity Act and they say, well, is this going to change things? And the truth is, it's not going to change things that much, and it's not going to change things today or next year, because there's no federal preemption in the Genius Act, and I highly doubt there will be federal preemption of the money transmission laws in the Clarity Act. But there is a dual path to be federally regulated under the Genius Act or to choose to be state regulated. But even if the Genius Act passed, and even if the market structure bill passes, just because a bill passes doesn't mean it automatically, comes into effect. There's a lot that happens between passage and coming into effect. So when I talk to projects, I say there are ways today to get to market, or you can wait until we get the legislation passed and the enacting regulations, but that's going to take time.
Michelle, thanks. Just a comment from Adam Goldberg. Shout out Adam, WSBA member, one of our policy guys, gurus. Lummis almost got into the big, beautiful bill, but it didn't get an amendment vote. There are rumors of a second reconciliation bill later in the year. So that could be where it's introduced, unless Clarity passes first with similar language. I would argue, and this is not a wager before anyone asks, Clarity is going to take a lot longer than we think. Michelle, I wanted to stick with you if I could, and then pull Josh and David into this conversation. I'm going to rip up the script a little bit. David will see this coming a mile away. I guess the question, Michelle, you've forgotten more about payments in the ecosystem than I'm ever going to know. Why aren't more payments done with crypto? Is it a user UX problem in the space?
I think fundamentally it comes down to a generational divide. I think if you think, I like to make this analogy. I think 5 years ago, when I asked my parents, can I just Venmo you money? They were like, I'm not using Venmo. Meanwhile, now they use it all the time. And I think what the research says is that users and consumers who are sort of 18 to 46, they're very interested in crypto payments, and that needle has been moved to institutions who want to use stable coins in particular in transactions. Like, imagine being able to do a cross-border deal with stable coins escrowed in a smart contract that can self-execute when you sign documents, and Josh is sleeping in New York, but the deal closed in Singapore,
Yep.
So I think consumer desire sort of moves the ball forward. But other people are just going to say, why do I need to use crypto to make a payment? I'm fine with my credit card until you've got a bunch of fees.
I'm asking for my friend David, who wants to really start buying the champagne and caviar with some of the crypto holdings that he's got when he's traveling overseas. Emma Channing weighing in. Good to have you join us. I am not escaping bets. My next bet will be with Emma. Stay tuned, folks. David, Josh, weigh in on some of this as well. We often have this kind of conversation. I'd love your perspectives, including the perspective you have with the clients that you service.
Well, one thing I'll say, Ron, and since you went there, I will say that on the tender today in Greece, there was somebody talking about Bitcoin making a new high. So this isn't just a US-centric conversation. But look, it costs 3% when you're using MasterCard or Visa or a credit card. And I think what people, as you start charging more and more, like let's say, for instance, you wanted to charge like tuition for college. Tuition for college is $100,000. Instead of charging and paying like a $3,000 fee to MasterCard or Visa, you could use stable coins and avoid that fee. And businesses that are doing more and more volume could avoid the majority of those fees. So it could become really lucrative. And it also could be a savings for consumers. Because I think one thing we've talked about on this show is that there's like this hidden 3% inflation that a lot of people don't talk about. When you go to like a pizza shop, if you go to a bodega, or if you go to a grocery store, some of them are passing along those 3% charges on credit cards to their consumers. So we're really seeing there's this real inflation that people don't talk about, that they're seeing that this would solve the majority of that problem.
Yeah. Josh, are you seeing likewise?
Yes. And I think what Michelle and David said both are spot on. I mean, I think also, just to add on to it, in addition to the consumer demand, right, and also what it can solve, right, if we do increase payments, crypto-based payments, right, stablecoin-based payments, I do think there is a user experience part that needs to get there. Anyway, maybe not for the demographic that Michelle was mentioning, but just in general, like, if it were something where people, just as an option, you have this option and you're just choosing, there's a fee, there's no fee, right? And you don't see behind, and you're not thinking, okay, is this with a stable coin? Is this not with a stable coin? I think once we get to that sort of level of, I don't want to say opacity, because obviously crypto is about transparency, but where you don't have to understand, and where you don't have to be like, wait, what am I dealing with? This is a stable coin. Some people are going to be fine with that. But I think en masse, like to get, true adoption across all sorts of demographics, just having, interfaces and experiences that just like people say, you don't know how your phone works, you just know that it works.
Yep. And you expect it to work.
Exactly. And also, just going back to the de minimis exception piece that Michelle was talking about earlier, one of the reasons that this is so important is, people, to the extent that there are critics of crypto, which of course they still exist, right? Where they say, oh, it's just speculating, it's just this, it's just that. Like, the more and more we want to actually use, and we want to facilitate the actual use of digital assets for things other than speculation and things like that. We should be incentivizing that.
Yep. Josh, thanks so much. There's still a lot to cover. For everyone in the audience, thank you so much for joining us. If you've got questions or comments for any of us, please put them in the chat. For the group, I just want to throw this out there. I think we're still recovering from the Circle IPO. Michelle, I want to pull you into this because David and I text about this stuff all the time, but I'm going to pivot a little bit and ask you this question. Why does everyone want a bank charter?
Well, bank charters were popular when Brian Brooks was at the OCC. Anchorage got theirs, and I think people, see what Anchorage has done with that. And I think Circle and Ripple applying for a bank charter is really preparing for the passage of the Genius Act and saying we're going to choose the federal route rather than the state by state route. And so I think, this is why we have a dual banking system, so that there is optionality to be able to choose what path you want to choose, and to have maybe a one primary federal regulator versus, various state regulators. But that's a good choice for some companies, and for other companies, it's going to be a good choice, to get some more limited MTLs, because maybe they focus on remittances, international remittances to Latin America. And so the states that they care about are your, California's, Arizona's, Texas, New Jersey, New Mexico, things like that. And so having a federal charter, it may not meet their needs in the same way that having state licenses would.
Yeah, Michelle, good point. David, Josh, I do want to add this to it. It just seemed interesting to me when we saw, Michelle, the news about Circle and Ripple, and there will presumably be others applying for bank charters. I found it interesting that the Fed dropped the reputational risk requirement for banks. David, am I overreading that, or is this an opportunity for banks to, quote unquote, stay competitive for their franchises?
I think this is probably orchestrated, and this is something that the banks have wanted. And as the banks don't want to let these other companies get ahead of them and have an advantage over them. So they want to be on a level playing field. So I'm not surprised by it. I still think the Fed has some work to do to level the playing field. I've seen in a few places there's still some rules or some things that need to be tweaked, but I do think we're on the path. And look, I think if you're a big entity who wants to play in the space and who want to do banking-like type activities, going the federal route, if you have the size and the heft, is worth the lift of doing it. I think it provides you a lot of optionality, but you need to be a big company like a Ripple, like a Circle. It's not meant for smaller, mid-sized companies. You really need to be a bigger company and have the economic heft to do that.
Yep. Josh, does the bank stuff, how many of your clients, and certainly won't ask names, are dealing with kind of the iterations of banking?
A lot. I would say even those that you might not think of as wanting a bank charter, right? They might want a bank charter. I think a couple of things, just pulling together some points. And I also see Emma put a very insightful comment up as well that we can cover in a second. I think going back to what Michelle said about the OCC and when Brian Brooks was there, of course, Brian Brooks, crypto background, and now we have Jonathan Gould, right? Just confirmed by the Senate. Also crypto background with Bitfury, right? If my memory serves. I think this is very helpful. To David's point about, a federal charter being worth the heavy lift, I think there are many excellent points about that. I would also just say, in my view, the state path also is very important, because just as we saw, the federal government may giveth and it may taketh away, right? We had Brian Brooks and then we didn't for an entire administration. And, it's very, very happy for Anchorage that they were able to hold on to that OCC charter, because I'm sure the OCC was doing everything in its power to try and say, obviously you saw other charters didn't get approved back then, right? So I do think that there are benefits, important benefits to state charters as well, because you may have a state where they're fully in on crypto and they are going to go to bat for you, right? For example, Wyoming comes to mind, right? So knowing that you have some consistency in terms of what's going to happen in the future, that's one important point. But as David and also I believe, as Emma is saying in the chat as well, having the federal, that's powerful, right? So,
but Josh, do you want to address Emma's comment, and then I've got a follow on for the group?
Sure. So Emma says, just a personal opinion, but there's a reason why the OCC approvals or otherwise of federal charters for digital asset custodians is one of the biggest linchpin issues in terms of innovation, custody, and keeping digital asset business onshore in the last 10 years. Hence why people want bank charters. Agree. Oh, there was one more thing. Can I just say the one
Of
more thing
course.
that came to mind? Sorry.
Yeah.
I'm rambling a bit. Is that, with respect to the Fed piece and getting rid of the reputational risk, in some ways, this kind of harmonizes what we've seen from other federal regulators recently. But I think it's just important to remember the bank lobby is really powerful, right?
Yes.
And to the extent that the non-banks may be viewed as being able to do something that the banks can't, banks don't like that, right? So to the extent that we can get everyone to a level playing field, it actually can help the crypto space because then we don't have banks fighting against it.
Yeah. Josh, let me put in, really well said, but let me push on one point. I would love Michelle and David as well to chime in on this. And I get the perspective, hey, get federal and get state. It's great. But let me ask this question for the non-unicorn startups that don't have piles of cash in the fintech space, for example, that doesn't work for them. I guess, Michelle, the question becomes, what's their strategy?
For entities where the federal path is not possible?
Like, we just can't afford all of what we're talking about here. What do we tell those fintech startups, for example?
Well, I think afford is a relative is a relative statement. I mean, there are certain baseline requirements you have to have even to become a non-depository institution, state-regulated money transmitter. And those requirements have to do with, how much of a net worth the entity has, and it's to protect consumers, right? Safety and soundness. But I think where at least I see the ecosystem heading is when we can streamline the ways in which we acquire and maintain licenses, and when we have more people in the industry who understand AML, KYC for crypto specific products, and when we have better tooling from the TRMs and the chain analysis and stuff like that, there is sort of a lower barrier to entry. And I think that lower barrier we're seeing. I also think there's a big role for community banks, right? And we have to remember our country is very big and very diverse. And community banks are very strong in certain regions, and there's a place for them. And so, there's the federally chartered entities, and then there's a robust number of state entities. And so I think what we're seeing is smaller companies coming into the US in more strategic ways, acquiring, either community banks or smaller banks, or acquiring strategic licenses, and then seeing, are my products and services taking off? And if they are, then expanding.
Michelle, really well said. I know you've got a hard stop. The Gulf Stream is done fueling and waiting for you. Stick around if you want. But again, Michelle, it's been a privilege to have you. David, Josh, we've got to do it. We've got to get into the market space. David, we're having a hard time. We couldn't support 118K on Bitcoin. It looks like 117 is a resistance level for us. Folks, David and Josh and I text all hours of night and day at this point talking about crypto prices. David, you fly out on the private jet and Bitcoin goes on a run. What's happening in the market?
Yeah, at a perfect time where I'm not by my desk, like literally sitting like on a plane, and everybody knows how much fun flying is these days. But look, the price was really constricting, and it was trading in a smaller and smaller range. So you knew at some point there would be volatility coming in, and it was either going to go to the upside or the downside. And fortunately, we finally had to push through the 111, 112. And I think, as a lot of people know, at different levels, there's a lot of shorting interest. So once we pushed through the 112 level, there was a number of shorts that got wiped out. And then it sort of moved up. So now we're in this 118 to 120 range where there's another amount of shorts at 120. And we're sort of like gradually moving. It's been a little different than other times in Bitcoin where you sort of said, 5% gain over 5% gain. This is more measured. But I think we've seen some really big selling. There was one Bitcoin whale that moved, I think, 80,000 Bitcoin, like original Bitcoin. So
That was
I think that was Josh. And Josh was so bold, she didn't even do a test transaction. She just sent him 10,000 at a time, you know, all gas, no brakes for Josh. And so,
Me, no.
so anyway, so we've seen there's lesser supply. And look, all these Bitcoin treasury companies, and I want to talk about this concept for a little bit, are buying Bitcoin too. So there's really a lot of supply coming in. And we may even have $1 billion worth of buy orders on IBIT today. So a lot of buyers coming in and less sellers. And we move past like a strategic point that had been sort of holding us back.
David, thanks so much. Michelle, while we've got you, did the Gitlitz family office managers call you the other morning and say, look, we got to get in more? We're looking at a price run up?
I think people just ask me about payments, to be honest. And I say you need to talk to a better investment professional than me. But I apologize. I have to sign off. But it's always wonderful joining the WSBA. And thanks so much for having me.
Michelle, you're the best. See you soon. Have a great weekend. Chat with you. Take care.
Take care.
Josh, I got to ask you, I'm waiting for the 2 words that we love to hear you say. What's the market been?
Well, wait, can I say one thing first before I say those 2 words?
Yes, go for it. Go for it.
So, I guess this was earlier today, but I noticed it right before we were starting, which is that reportedly Bitcoin has surpassed silver to become the 6th largest asset class in the world. And with that, I say, does this mean risk on?
The answer is yes.
Yeah. And one thing, Ron, I want you to pipe in is I think also we heard a lot of the Fed governors, were supportive of a rate cut. And really it was the issue of what effect tariffs have on inflation that was really leaving them, sort of pausing and not moving ahead with rate cuts. And I think that we've not seen inflation from the different tariff regimes that we have right now. Some that have been crystallized, some are still in process. So I think there's a lot of hope in the market that we see a rate cut at the next meeting, and that the sort of mind share is that the tariffs aren't affecting inflation. We're taking in, I think I read somewhere, we might take in $300 billion by the end of the year from tariffs at this current rate, so that it is not being inflationary. And I think that is the piece that a lot of people are looking at.
David, I'm with you. I want to plow into that a little bit. And for the record, my Friday is not complete unless I hear Josh say the words risk on. So thank you, Josh, for saying that. David, I'm with you. And I think there's something else that's happening here. I do want to talk about interest rates. But before I do that, politics aside, the tariff concerns are now not that they're not concerning, but I don't think anyone believes them anymore, or at least believes the broad impact. And we hear things like 35% and 50%, and then 3 or 4 days later, and we'll see the sell-off. You and I will watch 3-4% drops across the board, and then it goes away. So I really think, I'm just going to use the phrase tariff fatigue. And I think what that's really starting to do is build up pent-up demand for a bunch of different assets. You got gold at 3,300 as the hedge, but S&P's up on the year big. Bitcoin is up, I think year to date, we're up almost 24%. And the last thing I'll add to that, David, is tell me I'm wrong. I'm really particularly focused on the interest rate landscape. I think the Fed is once again behind the curve. We should have at least 2 interest rate cuts. I don't think we'll have 2 interest rate cuts, but we'll get a boatload of them in 2026. And I think the money flows are indicating that as well. David, again, tell me you disagree, and Josh would love your perspectives on it as well.
No, I agree. And remember, they're relying on backwards data. It gets revised all the time.
Yep.
So we still have the data issue. Look, I think for those of us who followed, President Trump, this is his playbook. He makes, big gestures. It's his negotiating style. And look, it's worked for him. And so, when I see, Canada's going to be 35% today, I think he's using these numbers as different levers. A, I think to get people to the table, and B, as a way of showing that, he's in control over these negotiations. And that's fine. Look, if we get to an outcome that we want, I think, there's a traditional way we might have negotiated these agreements, and this is, Trump's way. But I think at the end of the day, Ideally, we're going to get to better trade arrangements than we've had, and it's showing that it's not inflationary. So, it's my hope that we do see a cut at the next meeting, because there are other things that are sort of locked up that people aren't appreciating. The housing market is really kind of locked up. You're seeing housing prices either stagnate or go up a little bit, or maybe go down a little bit. But, bigger mortgages are at 7% or close to 7% for jumbo mortgages. And that, on top of prices that are still sort of elevated, has really locked up a majority of the housing market. And that's not healthy, regardless of whether you're selling, buying, wherever you are. That's not healthy. We need a more robust housing market. So this really is having a knock-on effect that people don't always consider.
Josh, go ahead.
Yeah, speaking of the housing market, I had seen something online, because I do peruse, the various.
She goes mansion shopping, for everyone in the audience, just so we're clear.
Only aspirationally, right? But but I was reading that, I think a record, I could be wrong, but my recollection is that it was a record number of delistings, right? Where people weren't getting their prices, and rather than drop, they are just delisting their homes, partly because, they have such a good thing going, I guess, on their existing mortgage rates, right? That they don't feel like there's anyway, to David's point, it's just continuing this sort of challenge. I recall you guys discussing, although I don't know whether we were discussing it on air or off, but this idea about the backward-looking data and the fact that with respect to layoffs at the federal government level, that severance is still ongoing, and that we may not have felt the effects yet. I would love to hear you guys explain a little bit more about that, because that was really interesting when you guys.
Yeah, I'll kick it off. David, would love to get your perspectives on it. As Doge went, quote unquote, rampaging through the government to initiate these cuts, there's a series of criteria around who gets let go, who accepts a package, what's the payout for those. And I don't know the timeline on some of that, David, but I will share that we've been hearing it hasn't hit the numbers yet conversation across the board. Josh, to your point, including for job cuts in the federal government. Again, I know it sounds a bit cynical, but David, I'm not buying it that it hasn't hit and that we're waiting for this big bang of bad numbers to come out.
Yeah, look, some employees, I think, got 8 months severance, and that's where that data point came from. But look, there was a lot of overhiring that was done on the federal level last year. So in my mind, some of this is right sizing, and then, you can have varying views on the rest. But there was overhiring last year, and again, some of it's right sizing. And look, there was a pickup in state and local government hiring this past month, which is interesting. So there's hiring going on. I think that, the job market is dynamic, but I don't think anyone thinks that it's sort of breaking one way or the other right now. And I think that we will see some federal, jobs come in, but it's expected. But we're still, I haven't checked today, but I think we're still like 4.1 or 4.2. So even if we were to get, go up to 4.4 even, or 4.5, it's still not an elevated level. And, it's still a fairly robust job market.
David, I'd love to stay on the job market if you and Josh will let me. And this brings me to private market employment. And the reason I bring this up, we've seen layoffs at particularly certain tech companies, single-digit percentages. Look, anyone getting laid off, it's a traumatic thing, and we get that. But in the aggregate, these are not wholesale, vast economic layoffs, David. But let me ask you this question. We've got the S&P hitting records. We've got the Dow and the NASDAQ hitting records. The equities markets, David, seem to be telling us something different than the fixed income markets, particularly with 10-year yields can't break below 4%. Who's missing something in that dichotomy?
I think there's a couple of things involved, and it ties into a couple of threads I want to talk about. One is, I think people still think that our markets, the American markets, are where you can make the best returns. And I think Europe has done fairly well this year, so I think our markets are catching up. Your second point, it is a little worrying that when companies have record profits, that they are still laying people off. And so I guess it's a question of, are companies getting, are they getting more efficient? Why are we seeing big layoffs in companies that are reporting close to record profits? So I do think that is concerning. And I think, it's very dynamic what's going on. So I think our markets I think really the mainstream media really was focusing on, oh, these tariffs are going to be terrible. Companies are going to have to restate earnings, and it really created a situation that just didn't end up playing out. And we're just not seeing the inflation that people thought we would from tariffs.
Yep. Josh, do you agree? I got to pull you into the macro conversation, Josh. You know.
I mean, I agree. Although you guys, you guys know what is that you always say, Ron? You've forgotten more than I will ever know. So
using that against me, but Josh, no, I appreciate it. David, I want to ask about one more macro indicator, and I'm not sure if you or Josh pay attention to this. Anyone in the audience would love your thoughts as well. One of the forward indicators for me, David, believe it or not, is airline earnings. And when you look at what happened with Delta, I think it was Delta that had stopped giving guidance or pulled back their guidance, recently reinstated it to the upside, and the airline started a good run. To me, that's a forward indicator of future economic activity, David. Agreed or not?
I agree, although Delta's not on my high list since the last two international trips I've taken. Both got canceled, and I had to, pivot around to get another flight. So maybe they're making money from these canceled flights. And all joking aside, I think we are seeing, travel pick up. And I think obviously that they've sort of done the economics on the tariffs, and they've figured out that, they can mitigate it, or they know what they're dealing with, and it's not a black box anymore. I think the other thing is that, we did have a conflict that flared up. I mean, we still have issues in the Middle East, but we had the conflict that flared up, but the oil prices really were stable. They went up for a little while and they've come back down. So I don't think the airlines have the pressures of $80 or $90 a gallon oil that they may have had because of the conflict. So I think, a number of factors are leading to them having more clarity. And yes, I do think it's good for the market.
Yeah. David, Josh, go ahead, Josh.
So another topic. Well, actually, do you want to stay with this for a minute?
The floor is yours.
Okay.
Yes.
All right. So another thing that has been discussed both in the media and in conversations generally is about how much Bitcoin remains to be mined. Right. And so I think I saw something quoted that as of it was in, actually I just pulled it up in Cointelegraph. It appears that at least as of May 2025, although this was published in mid-June, approximately 19.6 million Bitcoin had been mined, or about 93.3% of the total supply. It says that leaves roughly 1.4 million Bitcoin yet to be created, and those remaining coins will be mined very slowly. So I'm just wondering if we can sort of forecast what this may mean, right? We've got obviously price increases. We have some companies that focus on mining. How will this affect profitability and people's moves in this regard? Just curious. And I also see that Adam Goldberg provided a comment.
Yeah, let's do the Adam comment first because it goes back to our prior conversation, Josh, if we could. Thank you, Adam Goldberg. BofA reported credit delinquencies are going down for the first time in years, and that top 20% of consumers are expanding spending again. That is absolutely true for David and Josh. They're in the top 0.02% of spenders. Now, Adam, I did see that did a really good point. Josh, to your commentary about the diminishing supplies over time for Bitcoin, there's the supply-demand dynamic that says, well, that will force price increases. I would argue, agreed, so long as there's a common use case across the global marketplace for it. I think there is, and I think we're seeing that play out. David, from a supply-demand dynamic, that alone is the upside argument for Bitcoin. And I think it was Standard Chartered, anyone in the audience, forgive me if I'm getting the data wrong, that's forecasting by end of year 200 plus K on BTC. David, how accurate do you think that is, and why is that important?
And I think Matt Haugen of Bitwise also is saying 200K by then.
Shout out to Matt.
I want to give him credit for that.
Yeah.
So I think it's a really interesting dynamic. And one of the things that we all still waiting for is whether the wire center banks will allow their customers to trade Bitcoin or not. So I would say that if customers from the wirehouses do get access to these products before the end of the year, like 200K is a possibility. I'm still on the fence about us going above 150 right now and really want to look at things a little closer. But I think that as demand increases, and as Josh said, there's less supply in the markets, I think it really will depend on how many old holders are left and how many of them are going to sell. Because we really stayed in this range because a lot of big old holders were selling in the 100 to 110 range.
Yeah.
So I think it's how much supply is really left to be absorbed. And then, it'll be a question of will different entities, people who are in wirehouses or other places get access to these, to buying Bitcoin.
David, I want to throw two things out there, and I know we've only got a few minutes left. I agree with you on the not 150 number, and I thought I saw a lot of options activity writing options at 133. The other thing I did see, David, and I wanted to know if you saw some of this metric, was movement off exchange or wallet movement for whales and not whales. But some of that whale movement was going to institutional desks, as i.e. they're prepping for something. Am I overreading some of those metrics?
Well, look, you don't know if some of these, that are going on institutional desks are being bought on behalf of customers. Right. They could be bought on their own account. They could be bought on behalf of customers. And some of them also could be part of the amount that the different mutual funds need. Because, I'm forgetting the term, it will come to me, but, some of the players who support the qualified participants, I think it is, but they have to buy a certain amount to help support the mutual fund. So that could be some of it too. Look, ultimately, it would not surprise me at all if some of the banks that have not allowed their customers to purchase the mutual funds or purchase Bitcoin are buying it on their own behalf and buying it in their prop accounts. That would not surprise me at all. And we may find out sooner or later that is the case. But to finally answer your question, since I was a little bit circuitous in doing it, I do think at some point some are prepping for offering these, and that would be the first step to have some on their balance sheets.
Josh, you see that elegant word, circuitous? I don't use the word circuitous. David, Josh, thanks so much. Shout out to Greg Murphy, our friend and member up in Toronto. Money supply increases over time have found their way to those consumers and the wealth effect of older people like me who are traveling. Fair point. A bunch of people are starting to spend money. David, Josh, we're almost at time. Josh, we've all got a busy week coming up. We've got a legal working group meeting coming up soon. I've lost track. I think a week from Monday. Josh, what have you focused on, and what's work focusing on for you in your travels?
In my travels, or just what's work
or your
focusing
day
on
to
for
day?
me?
Always seem to be on a jet someplace.
I mean, other than maybe some, maybe a jaunt to DC next week. Who knows? I don't think that I'm going anywhere for next week, but other than potentially that. But what I would say is things continue to be accelerating in terms of busyness. I mean, from all sorts of angles, everything from tokenization and digital financial market infrastructure type things to stablecoin matters to bank charters, harkening back to Michelle, to crypto M&A, to potential new rollouts by banks in certain programs, to custody, and I would say, like, I don't feel like the experience that I'm saying is unique to me or to my firm. Like, I think, David, you're probably experiencing this too. Ron, I'm sure you're experiencing it as well. And just from people that I've been speaking with in the market and at different firms, it seems to be like across the board, water rising at a huge rate. So I think it's exciting times. But what about you guys? What are you guys doing next week?
David, I know you're on a well-deserved vacation. I'll just make it really quick. Obviously, with the membership, Josh, a lot of that is feeding into that rising tide of how are we addressing the opportunities that are presented here. Added with a little bit of, is this sustainable? And my argument is always stick around. It might be a little bit bumpy, but there's good things ahead. We've got a bunch of webinars focused on a bunch of different things, Josh, between stablecoins and some of the legislation that's happening in DC. And I'm happy to announce here, we will be doing our in-person event October 23rd in New York City. So you will all be seeing the advertisements for that. Anyone in New York gets to see David and Josh live on stage. So if you can join us, please join us as well. But David, You're on a well-deserved vacation, old friend, and I know I'll probably be texting you as the market moves, but what are your closing thoughts?
Look, I did see some irony on like finally going away on a vacation, long overdue family vacation, and things start to blow up in a positive way. But I'm really focused on like quality family time as we're here in Europe. But I will say that I am really curious to pay attention to like next week what's happening, both sort of market numbers, like looking at like 120, 121 on Bitcoin and 3,000 on ETH, and then also, do we get traction next week on, stable, what is going to happen next week? And I'm, staying very optimistic on we're moving forward. But I was a little disappointed that the Democrats are now planning their sort of, you don't want to use the words that come to mind, but Maxine Waters sort of, we'll call it a pity
week.
Yeah, the anti-crypto pity party week of events, which I am really a little disappointed about. But I'm really looking forward to making positive movement on the legislative front. And I'm hoping that the price action continues favorable. I think we may see, Bitcoin sort of stabilize and dominance go down a little bit and start seeing more action in Ethereum and altcoins, which I think a lot of people are looking for.
David, we've got Ethereum bumping up against 3,000 again. You and I will have to have the thesis conversation about Ethereum. I think it's important. And it looks like 117 is a good support level. We're sustaining that. David, Josh, it is always a privilege to be on air with you, my friends. For everyone in the audience, thank you so much for joining us. If we miss any questions, drop us a note, info@wsba.co. And shout out to our dear friend who's now on the Gulfstream, Michelle Gitlitz. I really appreciate her insights. David, enjoy the vacation. Josh, always good to see you. We'll leave it there. See you all next week. Take care. Bye-bye.
Take care, everybody.